Hello everyone, welcome to my channel hdorionn. We are studying accountancy for class 12 from T.S. Grewal's textbook 2023 edition, Accounting for Partnership Firms. Chapter 4, Admission of a Partner. And in this video, we will discuss preparation of revaluation account and partner's capital account and balance sheet. So let us see some questions related to this. So let us see question number 66. Sushil and Satish are partners in a firm sharing profits in the ratio of 3:2. Their balance sheet as at 31st March 2023 was as follows. So here is the balance sheet given. To the liabilities of it, we have got outstanding rent of rupees 13,000, creditors rupees 20,000, workman compensation reserve rupees 5,600, and capital of partner Sushil 50,000 rupees, Satish rupees 60,000. To the asset side, we have got cash of rupees 10,000, sundry debtors of rupees 80,000, less provision rupees 4,000. In the outer column, we have got 76,000, stock rupees 20,000, profit and loss account rupees 4,000, machinery rupees 38,600. Grand total is 1,48,600. Now the further part of the question. On 1st April 2023, they admit Samir as a partner on the following terms. Samir will bring rupees 40,000 through check as his share of capital and will be entitled to 1/6 share in the profits. Samir is not to bring goodwill in cash. Sushil and Satish will raise the goodwill in the books, which is valued at 1.5 years purchase of the average profit of last 3 years less rupees 12,000. Profits of last 3 years amounted to rupees 10,000, rupees 20,000 and rupees 30,000. So in this point, the treatment of goodwill is suggested. Claim on account of workman compensation is rupees 3,000, and here you see there is a reserve of rupees 5,600 and a claim of rupees 3,000. So remaining 2,600 will be given to old partners in their profit sharing ratio. To write off bad debts of rupees 6,000. So there is a bad debts of rupees 6,000 and there is also a provision of rupees 4,000. So out of this 6,000, 4,000 will be adjusted from here and remaining 2,000 will go to revaluation account. There being a claim against the firm for damage, liabilities to the extent of rupees 2,000 should be created. So it is a contingency liability to be created. Outstanding rent to be brought down to rupees 11,200, whereas in the books it is 13,000 on the liability side, and we have to reduce it by 1,800 rupees. Past journal entries, prepare partners' capital accounts and opening balance sheet. So let us see the solution for this. Solution 66 and fourth point, to write off bad debts. Now bad debts are of rupees 6,000, so 2 bad debts, yeah, 2 debtors. Bad debts are of rupees 6,000, but there is a provision for bad debts of rupees 4,000, so only 2,000 will be reduced from debtors. Then creditors are to be paid more, so 2 creditors are to be paid more by rupees 2,000. Then in point 4.6 it says there is a claim for damages, so 2 damage claim of rupees 2,000. Then outstanding rent, which is a liability, is brought down to rupees 11,200. So by outstanding rent, not rent, yeah, rent, from 13,000 it has come down to 11,200. So it is reduced by 800. We know that increase in asset or decrease in liabilities we have to write on the debit side, and reverse, decrease in asset or increase in liabilities to be recorded on the debit side. Now here grand total is rupees 6,000. So 6,000 minus 1,800 is rupees 4,200, which is a loss on revaluation. and it will be given to old partners in their profit sharing ratio, which is 3:2. So to Sushil and Satish. When you break this, it is 2520 and 1680. So this is revaluation account. Now partners capital account. First we will write the opening balance by balance brought down as given in the balance sheet, rupees 50,000 and rupees 60,000. Then loss on revaluation, let us write first to revaluation because losses are debit balances, so it will be shifted to the debit of partners capital account. Now in the balance sheet asset side there is profit and loss account of rupees 4,000, so that will be distributed here to the old partners in their old profit sharing ratio, rupees 4,000 in the ratio of 3:2, 2,400 and 1,600. And to the liability side we have got workmen compensation reserve. So by workmen compensation reserve, it is of rupees 5,600, but against this there is a claim of rupees 3,000, so we will keep it reserved for that, and remaining 2,600 will be given to old partners in their old profit sharing ratio. So amount is 1,560 and rupees 1,040. Then new partner is bringing his portion of capital. So by bank, by check, and therefore we have to compulsorily write by bank, and this amount is 40,000 rupees. So it is 40,000, and also his portion of premium for goodwill. So premium for goodwill is not to be brought as stated in point 2 in the question, and we will calculate the value of goodwill now here itself. Fine. So goodwill is equal to 3 years average profit. So 3 years profit are given to us, which is 10,000 rupees and 20,000 and 30,000 average. So we will divide it by 3 and this will be the average, and it says that 1.5 years purchase, so we will multiply it with 1.5, 1.5 year, and then it says less 12,000, so we will subtract 12,000 from it. So this way the goodwill will be calculated, and here the amount will be rupees 30,000 here when you multiply minus 12,000, which is equal to rupees 18,000. Now this 18,000 rupees is the total goodwill of the firm, and Samir will bring his portion of goodwill. So Samir's portion of goodwill is how much then? 18,000 into his portion, which is 1/6, that is equal to 3,000, and sacrificing ratio is, old ratio is our sacrificing ratio, that is 3:2. So it will be paid to the old partners in the sacrificing ratio, which is 3:2. So 3,000 rupees, 1,800 and 1,200. So here we will write by premium for goodwill 1,800 and 1,200. And because Samir is not bringing his portion of goodwill, therefore it will not be premium account but by Samir's current account. It will be maintained by Samir's current account. Had he only brought it in cash, we would have written premium account, but because he has not brought, and therefore Samir's current account will be maintained for treatment of goodwill. So now we will close the account here, partners capital account. Samir 40,000. So here also we will write 40,000 because it is the to balance closed down. It is credit balance. shown on the liability side in the balance sheet. Here, if you add here, it is 62,240. Minus these two figures will get you 58,960. Now add here, it is 53,360. Subtract these two figures, you get 48,440. So with these closing balances, we will prepare the new balance sheet of the firm. So in the balance sheet, first we will write capitals of all the three partners, that is Sushil, Satish and Samir. Their closing capital balances are rupees 48,440 and 58,960 and rupees 40,000. Grand total here, and we will put it in the outer column, 1,47,400. Then outstanding rent. It is reduced by 1,800, and now it is new figure is 11,200. Then creditors, 20,000 plus 2,000, that is 22,000, because creditors are to be paid rupees 2,000 more. Then workmen compensation reserve is also there, and claim, it is 3,000. It is a claim against workmen compensation reserve. So there was 5,800, 5,600 and 3,000 is the claim. And damage claim is also there. Damage claim of rupees 2,000 is made. So it is a new liability. Grand total here you will get rupees 1,85,600. Now to the asset side, we have got cash of rupees 10,000. Then bank. It is the capital amount brought by new partner Mohit. Then debtors. Debtors are of rupees 80,000, out of which 6,000 is gone bad. So less bad debts, 74,000. Then stock as it is, as in the opening balance sheet. Then machine, rupees 38,600, no change here. And then we have got Samir's current account. It is the premium amount, it is the amount of goodwill which he has not brought in cash, for which debit balance is there. And grand total is 1,85,600. So this way the balance sheet is prepared. Now let us see the journal entry of this. So in the journal entry, let us treat the workman compensation reserve first. So workman compensation reserve account debited. It will be closed by rupees 5,600, and to workman compensation reserve claim, there is a claim of rupees 3,000. And now the remaining 2,600 will be given to partner Sushil and Satish. Sushil's capital account and to Satish capital account. In their profit sharing ratio, that is 3:2, and the amount is 1,560 and rupees 1,400. Being workman compensation reserve closed. Now to the asset side, there is profit and loss account, so it will be also transferred to partners capital account. So Sushil current capital account debited, Satish to profit and loss account, and in the profit and loss account there is 4,000 rupees, and it will be transferred in their old profit sharing ratio 3:2. So not these are the wrong 2,400 and 1600. Yes, 1600. Being profit and loss closed. Now let us pass journal entries related to revaluation account. So first, revaluation account debited. Revaluation account debited to decrease in asset, that is debtor. It is decreasing by rupees 2000, and then creditors are increasing by rupees 2000, and there is a damage claim reserve created. Damage claim is there for rupees 2000. So a revaluation account is debited with rupees 6000, being decrease in asset or increase in liabilities. Now revaluation account will be credited, and outstanding rent which is decrease in liability by rupees 1800. So to revaluation account, being decrease in liability, that is outstanding rent rupees 1800. Now see, from this amount revaluation account, you can see that there is a debit balance of rupees 4200. So that 4200 is a loss, will be transferred to partners capital account. So here Sushil's capital account debited, Satish also debited to revaluation account 4200, and their profit sharing ratio is 3:2, so it is 2520 and rupees 1680, being loss on revaluation. At the same time, let us close the provision for doubtful debts account. Fine. So provision for doubtful debts account, it is a liabilities, and therefore it is utilized by bad debts. So bad debts, out of 6000, 4000 is utilized here, and remaining 2000 is subtracted from debtor. Fine. So being provision closed, being provision utilized or say transferred. Now the entry for Samir's admission. Samir is bringing rupees 40,000 as his portion of capital by check. So bank account debited rupees 40,000 to Samir's capital. Being capital by Samir. Now journal entry for not bringing cash for goodwill. So for that, Samir's current account will be debited. And the amount of goodwill is rupees 3000. To Sushil and to Satish. In their sacrificing ratio, which is the old ratio itself, so 1800 and 1200. So this is the solution for question number 66. Now let us see question number 67. Rajesh and Ravi are partners sharing profits in the ratio of 3:2. Their balance sheet as at 31st March 2023 stood as creditors rupees 38,500, outstanding rent rupees 4,000, capital Rajesh rupees 29,000, Ravi rupees 15,000, cash rupees 2,000, stock rupees 15,000, prepaid insurance rupees 1,500, debtors rupees 9,400, less provision rupees 400. In the outer column it is 9,000, machinery rupees 19,000, building rupees 35,000, and furniture rupees 5,000. Grand total is 86,500. Raman is admitted as a new partner, introducing a capital of rupees 16,000. The new profit sharing ratio is decided at 5:3:2. Raman is unable to bring in any cash for goodwill. So it is decided to value the goodwill on the basis of Raman's share in the profits and the capital contributed by him. Following revaluations are made. Stock to decrease by 5%. Provision for doubtful debts is to be rupees 500. Furniture to decrease by 10%. Building is valued at rupees 40,000. Show necessary ledger accounts and balance sheet of the new firm. So let us see the detailed explanation of this in the solution. So in revaluation account, stock is decreasing by 5%. So we know that decrease in asset or increase in liability is to be recorded on the debit side, and increase in asset or decrease in liability is to be recorded in credit side. So to stock 5%, and it is 750 rupees, and provision is to be created for bad and doubtful debts. Provision for doubtful debts rupees 100. Why 100? Because 400 is already there in the books. So a burden of 100 rupees will be here. Then furniture is to be decreased. So to furniture by 10%, and 5,000's 10% is 500 rupees. And building is to be appreciated. So by building, it is appreciated by 5,000 rupees. From 35 to 40, so there is an increase of rupees 5,000. Now we will determine the profit or loss on revaluation. So there is a credit balance of rupees 3,650, and this is our profit on revaluation. It will be given to the partners in their profit sharing ratio, old partners, in the ratio 3:2. So for the partner, who's the partner? Rajesh and Ravi. So when you break this, it is rupees 2,190 and rupees 1,460. Let us move on to partners capital account. But this is a question related to hidden goodwill. So let us calculate hidden goodwill first. Fine. So for hidden goodwill, we have to calculate the net worth of the firm based on new partners capital account. So net worth based on new partners capital. New partners capital as given in the question is rupees 16,000. 16,000. And new ratio is how much? New ratio is 5:3:2. So new partner Raman's portion is 2/10. So we will make the reciprocal of this, 10/2. New partner's capital multiplied by reciprocal of his portion of profit. This is how much? This is rupees 80,000. Now we will compare it with net worth without goodwill. So for that we have to add the capitals of all the three partners that is given in the balance sheet. And it is for Rajesh, it is how much? 29,000. Then Ravi, it is 15,000, and new partner Raman, it is 16,000. And we will also add profit on revaluation. Profit on revaluation, as we have calculated, it is 3,650. When you add this, you get an amount rupees 63,650. Now when you compare this, the difference is the amount of goodwill. It is how much? It is 16,350. 16,350. This is goodwill. And Raman is supposed to bring Raman's goodwill will be 16,350 into, see here, 2 by 10, which is equal to rupees 3,270. So this is the portion of Raman's goodwill which he is not bringing. When he is not bringing his portion of goodwill, it means current account of Raman is to be opened, and treatment of goodwill will be done in sacrificing ratio. So let us calculate sacrificing ratio as well. Now let us calculate sacrificing ratio for the treatment of goodwill. That is old ratio minus new ratio. Sacrificing ratio is equal to old ratio minus new ratio. You see here the old ratios and the new ratios of old partners are not the same, and as a result we have to calculate sacrificing ratio for treatment of goodwill. Old ratio cannot be taken as sacrificing ratio here. So for Rajesh, 3 by 5 minus 5 by 10, and Ravi, 5 by not 2 by 5 minus 3 by 10. Now LCM is 10, 6 minus 5, that is equal to 1 by 10. LCM is 10, 4 minus 3, that is equal to 1 by 10. So because the denominators are same, as a result the sacrificing ratio of partners is 1:1. Now partners capital account, first we will write by balance brought down. It is 29,000 and rupees 15,000 as given in the balance sheet. And revaluation profit, so by revaluation amount is rupees 2,190 and rupees 1,460, just we have calculated. Now by bank, because the amount of capital by Raman is brought by check, so bank account we have to maintain, and it is 16,000 rupees brought. And by Raman's current account for treatment of goodwill, amount of Raman's goodwill premium is how much? 3,270, and it will be given to the partners, sacrificing partners, in their sacrificing ratio, which is equal. So half will be given to Rajesh and the other half to Ravi, and the amount is 1,635. Now we will close the capital account. So to balance closed down, because there is no other item in the balance sheet to be distributed to the partners here. So here it is 16,000 rupees. Closing balance of Raman is 16,000. Credit balances, and here it is 18,095. And for Rajesh it is 32,825. So these are the closing capital balances of partners, and with this closing balances we have to draft the new balance sheet of the firm. So let us see the balance sheet now. Now the new balance sheet of the firm. First we will write on the liability side. Let us start. Creditors rupees 38,500, no change. Then outstanding, what is that? Rent, no change, rupees 4,000. Then capitals of partners, just we have calculated for Rajesh, Ravi and new partner Raman. Their closing balances as per capital accounts is 32,825, 18,095 and rupees 16,000. Grand total of which is rupees 66,920. And to the asset side, we have got cash rupees 2,000, bank rupees 16,000, stock 15,000 less 5% is 14,250. Then prepaid insurance, no change, that is 1,500 rupees. Then debtors of rupees 9,400, and there is a provision for bad debts of rupees 500. So in the outer column we will get 8,900. Then machine of rupees 19,000. Then building, it is a 40,000, 35 plus 5, that is 40,000. Furniture, furniture 5,000 minus 500 depreciation, that is 4,500. And Raman's current account. Raman's current account for not bringing the portion of goodwill, 3,270. Now let us grand total it. It is 1,09,420. So this way the balance sheet is to be prepared, and I hope that you have understood it very well.